Hello again and good day to all friends. This is Moshtaba Rasti from the Thales team, and today is November 21st, 2025. I'm here with you to analyze Bitcoin using the Thales Market Screener tool, presenting the morning report so you can have it. As always, keep in mind that these analyses are for educational and informational purposes, and if you use them to take positions in the market, the responsibility for any profit or loss is entirely yours. As you can see in this image, we filtered the trades from November 20th up to now for the expiry date of tomorrow, November 22nd, in our second database, the process database. As you can see, the curve shows an upward trend with a bottom around 85,000. The end of the delta's decline marked our bottom, which was observed, and currently the price could move in the direction of buying calls. Or the peak gamma point is at 92,300, and it can move there, and after that, even reach as high as 97,000. Buying calls with 150 Bitcoin has an advantage over buying puts in the micro trades, and they are targeting 92,500. Meanwhile, considering the recent downward trend from the previous hour, it seems that it was actually the put buyers who succeeded, and the target they had in mind, meaning below 87,600, was achieved. Overall, among option sellers, those selling puts are dominant, and they have predicted a target of 85,000. In fact, the call sellers have set a ceiling of 90,000 for the price, which hasn't been reached yet. Earlier, we were in a downward trend, so we can expect that in the next session, we might see an upward movement, and the price will likely be recorded in the range between 90,000 and 92,000. Well, in the second image, you can see that we've moved the expirations to November 23rd and 24th, which shows that even in the upcoming expirations, the market is still carrying a heavy bearish load. And from the trader's perspective, staying below 88,000 is still likely. In other words, traders still see the situation as bearish, and it's possible that we can move below 80,000. In fact, even if the price moves upward, it might still pull back toward 87,000 or 85,000, and we could spend some time fluctuating in this range. All right, in the next image, look here. In this image, we can see the intersection of the buyer and seller charts. The upper agreement point is at 93,000 and the lower agreement point is at 85,500, which was almost reached. The lower agreement point has formed a profit zone and an agreement zone, which makes it likely that the price will move in this direction. As we mentioned, this movement seems to have happened and materialized in the past hour, and now we can move toward the upper agreement point, around 93,000. If we move the slider forward in our market screener and consider the incoming trades from the start of today, this point is confirmed again. That is, when we look at the incoming trades from the beginning of today, our upper agreement point starts to become profitable from here, and the lower agreement point goes into loss, which shows that gradually, in the recent hours, trades have started to move toward a bullish probability. Now, in the next image, you can see that we have answered these same points into our indicator, and you can see that the forecast for tomorrow is again a downward movement. That is, you see our ceiling and floor have moved downward. And with this bearish move, the price showed this movement much sooner. And you can see that we've now reached around 85,000, which was the expected floor for tomorrow. Therefore, we can expect at least a rebound up to around 91,000 to 95,000, maybe return a bit to the red curve, and it's possible to go even higher from here, up to around 93,000. But as you can see, the expectation is still downward, and we will probably attack 87,000 and 85,000 again. Let's move on to the next image and review the strategies in the process database. When we look at the detailed trades, the heavier trades, we can identify 4 very large trades for tomorrow's expiry, each worth 100 Bitcoin. Out of these 400 Bitcoin trades, 2 are call buys and the other 2 are put sells. By combining these 4 strategies, you can see that a long risk reversal strategy is formed, which has a bullish outlook. This strategy sees 85,000 as the floor for tomorrow, and as you can see, we've already hit that level and are now moving upward. The trader expects a move up to 95,000 and even higher, meaning this trader expects their strategy to become profitable above 95,000. In fact, it's not just one trader, but several traders whose combined actions have created this strategy. The analysis for this strategy even suggests expectations above 95,000. Finally, in the last slide, let's take a look at the liquidity heat map. As you can see, the liquidity heat map shows a concentration of liquidity in the 88,000 to 90,000 range, and even higher up to 93,000, there's a significant amount of liquidity compared to lower levels. This could make these levels the price targets in the coming hours. However, gradually, liquidity is also increasing around 85,000. So after reaching these higher levels, we might see a move back down toward 85,000. Ultimately, if we want to draw a conclusion, considering the recent downtrend, as we mentioned, the detailed trades show that the expectations of call buyers and put sellers have been met, and we're likely moving toward the targets of call buyers and sellers, which could be around 90,000 to 92,000. However, the risk reversal strategy we mentioned could even suggest targets above 95,000. The liquidity levels also confirm this upward move. Still, looking at the expiries for the coming days and the rest of the week, as we discussed, shows that the overall sentiment remains bearish, and this upward move will likely be followed by a return to 85,000. Thank you for your attention, and I hope that the